Welcome back to the Deep Dive. So, if you've been following the whole decentralized finance space, you've probably seen this shift happening. It's moving away from just pure speculation and more towards, real-world utility.
Yeah.
And right in the middle of all that, Stellar.
Absolutely.
So our sources for this are really, really good. We went through the Stellar Development Foundation's recent AMA with their CEO, Danelle Dixon, and some new leadership they've brought in from huge names, PayPal, Block, places like that. And we also have their official roadmaps, institutional reports. So our mission here is to really understand Stellar's strategy right now, because they're moving from being, just a payments network to, a full stack platform. For DeFi, for real-world assets, the big question is, what actually makes Stellar the payments powerhouse today?
I think the timing for this is it's perfect. Because Stellar has been building this stuff kind of quietly for almost a decade. And we're only now getting to the point where the big global finance players are admitting that, payments and regulated financial services, that's the killer app for blockchain. We're finally past the what-if stage.
Okay, let's get right into that then with some real examples.
Yeah.
Before we get into the tech weeds or the big institutional names, I want to talk about what's actually working right now at scale.
Yes. Let's talk volume.
All right, start with Airtem. The SDF is reporting that Airtem, which is huge for paying freelance and remote workers, globally processed, get this, $1.2 billion.
A billion.
$1.2 billion in stablecoin volume in 2024. That's not a test. That's real money paying real people.
And that number is so important because it says everything about enterprise trust. First, it's about speed. These big companies need to know instantly that a worker in Argentina got paid. And second, it's about cost. The old way is slow and expensive. So when a company puts over $1 billion onto a network like Stellar, that's a massive vote of confidence in its reliability. There's zero room for error there.
And on the impact side, there's this report about GIZ, the German development agency. They're using the network to pay over 900 hospital workers in northwest Syria.
Which is a perfect example of where digital rails are just essential. You're getting around places where the banking infrastructure is broken or, just doesn't exist.
No more waiting for physical cash drops.
Exactly. It's instant settlement with stable coins, right, to the people who need it. It cuts out so many layers of delay and, frankly, risk.
And then remittances. We have to talk about MGI Access, MoneyGram. They're using Stellar for money transfers in over 170 countries. And the big win there for people sending money home is obvious.
Oh, for sure. You're not losing 6 or 7% of your money to fees.
That's huge.
It adds up to a massive impact on families. But the bigger picture here, the so what, is that Stellar is focused on these everyday problems. The goal isn't to make everyone a blockchain expert. It's to make the blockchain completely invisible. So it just solves the problems you already have, like high fees or slow transfers. That's real utility.
Okay, so if it's production-grade utility, who's buying in? Let's talk about the big names, the ones bridging traditional finance TradFi onto Stellar. Because the names mentioned in the AMA, they suggest we're at a tipping point.
We are. The list is basically a confirmation that the regulatory questions have been, for the most part, answered for Stellar.
You start with Visa. Visa is the undisputed king of payments.
The king.
And they announced they're supporting Stellar for their stablecoin settlement platform. That just seems like the loudest possible endorsement of the tech.
It is. It tells you that when Visa scanned the entire landscape for a network that could handle 24/7 settlement, Stellar won. On speed, on cost, on reliability.
And it's already live, right? With partners like Wirex doing dual stablecoin settlement.
Yep. USDC and EURC. Settling card payments right on the chain. So we're not tied to bank hours anymore. It's instant.
And then PayPal.
The other giant.
With their PYUSD stablecoin launching on Stellar, it's not just an asset. It's their entire merchant ecosystem being plugged in.
Think about what that means for a small business. Instant settlement, almost zero cost. PayPal's reach makes Stellar a core piece of e-commerce infrastructure practically overnight.
And this all ties back to the regulatory piece. You have Societe Generale Forge launching their MiCA-compliant Euro stablecoin on Stellar.
Exactly. The compliance part isn't an afterthought. It's the first step. And the SDF played the long game on this, building relationships, building compliance tools for years. And now you're seeing U.S. legislation like the Genius Act start to clear the path.
Making it easier for TradFi to plug in using the anchors.
Precisely. Those anchors are the bridges. They are absolutely essential.
And that institutional confidence is what's fueling their whole real-world asset strategy, the RWA strategy. They're aiming for $3 billion in RWAs on-chain by 2025, 2026.
It's a huge number. And, it depends on that regulatory clarity holding, but the momentum is definitely there. The best example right now has to be Franklin Templeton. They tokenized almost $500 million of their money market fund on Stellar.
And that's where it gets really interesting for you listening, for the average investor.
Totally, because they are breaking down walls. A fund like that used to have, a $10,000 minimum, maybe 50?
At least, yeah.
It was exclusive. By tokenizing it, they make it available to almost anyone, sometimes with a minimum of just $100.
And it's not just about access. The back end gets way more efficient. Settlement goes from days, which is standard, down to a few seconds.
And that's a complete game changer for asset managers. Plus, it's not a one-off. The pipeline is pretty strong. You have Ondo USDY, more from SockForge, all bringing different kinds of yield-bearing assets, treasury bills, onto the network.
Okay, we have to pivot to the tech now, because none of this happens. $1 billion in payments, Visa, $500 million in assets, without a serious engine underneath. Stellar uses the Stellar Consensus Protocol, or SEP, proof of agreement. Can you break down for us why this is so different from the big ones, like proof of work or proof of stake?
This is the absolute core of why Stellar is what it is. SCP is a type of federated Byzantine agreement. So, with proof of work, power is about how much energy you can burn. With proof of stake, which some people call a plutocracy.
Right, because money buys power.
Exactly. Power is tied directly to how much capital you can stake.
So in a POS system, if you have 51% of the stake, you basically own the network. How does SCP stop that from happening?
It stops it by using something called explicit reconfigurable trust. So in SCP, every validator, whether it's a huge bank or a small community node, chooses its own quorum set.
Its own little trusted circle.
It's just a list of other nodes it trusts. Consensus gets built from the bottom up through these overlapping circles of trust.
So power isn't bought, it's granted by your peers. What if a validator starts acting up?
And that is the genius of it. If a validator misbehaves or even just changes its policies in a way the community doesn't like, its peers can just drop it. They can instantly revoke that trust and agree on a new set of validators. And crucially, this happens without a messy fork. You don't have to buy billions of dollars to outvote a bad actor.
It's a social contract.
It is. If you break the community's trust, your power is gone.
That's a huge difference. And the efficiency must be off the charts.
It is. That's why Visa and PayPal are here. It's incredibly energy efficient. You get transaction finality in 3 to 5 seconds. And the cost is basically zero, a tiny fraction of a cent just to stop spam.
And they're not stopping there. The roadmap for 2025 and 2026 shows they're building for even more. What are the big targets?
The main goal is to push the theoretical TPS, transactions per second, up to 5,000. It's a massive leap, designed for when all these enterprise stablecoins really hit their stride. And to do that, Protocol 23 is going to cut the ledger close, time the block, time in half, from 5 seconds down to 2.5.
Half the time, double the capacity.
They got it. And at the same time, they're beefing up the core, increasing the number of those super reliable Tier 1 validators from 7 to 13. So they're getting bigger and stronger simultaneously.
And that speed and flexibility is what lets them move beyond just payments. The Soroban smart contract platform really changed the game. What new things are being built on it?
Soroban unlocked all this new complexity. Now you're seeing things like yield-bearing assets, more advanced trading, lending markets. Blend is a great example. It's a permissionless lending and borrowing market. You need these kinds of building blocks to support all the RWAs we were talking about.
Right. You need a way to lend against your tokenized T-bills.
Exactly. And the next big frontier for them is privacy. Protocol 25, which they're calling X-ray, is all about bringing in zero-knowledge, or ZK, cryptography.
Which is what institutions have been asking for.
It's critical. They need confidentiality, but they also need to be able to prove things to regulators without showing all the data. ZK proofs let them do that. And Stellar is laying the groundwork by adding 2 key pieces.
Which are?
First is the BN254 elliptic curve. That's for verifying the ZK proofs, and it helps it talk to existing EVM tools. Second, and this is really important for cost, is adding Poseidon hash functions.
Okay, why does a special hash function matter to me?
It matters because it makes generating those ZK proofs way, way cheaper and faster. If you're a bank doing thousands of these transactions, the cost to generate proofs is a huge operational expense. This is a very specific technical feature designed to win over those big institutional users.
And we can see all this work paying off in their 2025 IL Awards. They highlight projects for impact, innovation, and interoperability.
For sure. The Impact Winner decaf is a perfect example of the whole vision. It's a non-custodial app for stablecoins, it's the #1 wallet for MoneyGram volume, and they have things like the decaf Visa card. Plus, they help NGOs deliver aid. It's the whole package.
It is. Then for innovation, you have Etherfuse. They're tokenizing government treasuries into stable bonds and issuing a peso-denominated stable token.
Making institutional-grade yield available to everyone.
Simple, low risk, one trust line away. And the interoperability winner was Defindex. They're all about making DeFi simple. They take complex strategies and package them into simple plug-and-play savings accounts that wallets can just integrate. They're taking the friction out. So to pull this all together, let's look at the ultimate case study. The Marshall Islands. This is proof that the entire stack, from tech to policy, works for a sovereign nation.
Right. The Marshall Islands ran the world's first on-chain universal basic income program, a UBI, and they did it using a digitally native sovereign bond called USDM1, all on Stellar.
And the structure of that bond is what's so clever, right? It's not some volatile crypto asset.
Not at all. That's the key. The USDM1 is a US dollar bond, fully backed 1-to-1 by US Treasury bills held in a trust. The legal framework is New York law using a really solid Brady bond structure. The blockchain is purely the delivery rail. All the crypto market risk is gone.
And for a country like the Marshall Islands, which is just a huge area of remote atolls, the logistics are a nightmare.
This solves that. They replaced slow, expensive quarterly cash drops with instant digital transfers to a wallet app. Using the Stellar disbursement platform gave the government total transparency, and the people got their money instantly and reliably. It's a blueprint.
So if we synthesize all this, what's the big takeaway?
The takeaway is that Stellar has positioned itself as this compliant, invisible infrastructure for global commerce. Their long, patient game built on SEP is now paying off. The focus is all on utility payments. RWA is not speculation.
Right. The strategy is clear. Go after enterprise adoption with high-performance, strict compliance, and now adding tools like ZK privacy that institutions demand. So let's end with a final thought for you to chew on. We've talked about how Stellar's consensus, STP, is unique. Power is granted by peer trust, and that trust can be revoked. It's completely different from proof of stake, where power is just bought with capital. So the question is this. As more central banks and major financial institutions move on-chain, will this SEP model of explicit, revocable, community-chosen trust become the mandatory standard for global financial stability? Will it prove to be better than a system where power is just tied to who has the most money?
That is definitely a question worth its own deep dive.
Thanks for joining the deep dive. We'll see you next time.